you obviously want to pay attention to projects that they have money in the market. But when you see that downward tick on the MFI, that's like, okay, money's leaving the market. So maybe we're going to start to see a loss of liquidity or some other things, so there's that. But when we're talking about EMAs, like I like to use exponential moving averages because they move a little bit faster than moving averages. And the really cool thing about it is in crypto, we want to use faster indicators because crypto does move a little bit faster than traditional stocks. My go-to exponential moving averages are the 9, the 21. I'm visualizing in my head right now. The 9, the 21, the 30, the 50, 100, and 200. And an ideal setup that I like to see them all propped upward like this and price action going that way.
So hi everyone, we have a very, very special treat today. We have the very, very popular investor slash podcast host slash YouTuber Wendy O joining us today. Wendy, it's an honor to have you here.
Thank you so much for having me. I'm so excited to chat with you a little bit and meet your audience. So thank you.
Before I begin, at least so my audience would get to know more about you, I want to start off with this. Looking at the crypto landscape, there's probably around 2 to 3% of the population who believes in it and are investing into it. What did you see in it that made it click for you that this isn't just a flip, but this is something that could shape the next decade or so of how finances would be, how technology would be as well?
It didn't click right away because at the time when I first invested, first I heard about Bitcoin like 2011, 2012, maybe 2010. I don't even remember. It was such a long time ago. And I was like, I don't know what this is. This is kind of weird. Like, I don't know. I didn't think I was tech savvy or smart enough to understand. But fast forward, I kept hearing about Bitcoin on the radio, libertarian radio. I was like, okay, this thing is kind of cool. I can invest in it. But what happened was I actually went into a TD Ameritrade because I wanted to invest in stocks. And I was like, okay, maybe I can be a stay-at-home mom if I was able to learn how to trade stocks. Because I was in the process of quitting my job and finishing school. And I had a newer child, a new baby. She was, I think, a year at that time. I remember she's super little. But I walked into a TD Ameritrade and they're like, you need $25,000 to invest with us. And I was like shocked, like $25,000 because I grew up, lower middle class. I didn't have $25,000. I grew up in a single mom household. There was 4 of us that lived in a bedroom.
Wow.
And I was like, I didn't have $25,000 for that. I was trying to save to pay through school because I didn't want to take loans out. Like I was pretty money savvy, but I wasn't really like investing savvy because you don't really get taught that in American schools. But anyways, so I bought Bitcoin. I remember I was holding my daughter, she was crying. Like I was able to set the Coinbase account up and I was able to invest Bitcoin, Ethereum, Litecoin. But then I started to do more and more research about it. Like, what is this? Like, whatnot. And then I learned, I can invest in this thing 24/7, 365. The market doesn't close. This is super cool. I can invest on my own without a brokerage telling me what I can and can't do. This is great. So then that part was cool. But then I started learning about money and I started learning about government and I started learning about how these financial bodies work. And I was like, okay, there's a lot of things I kind of knew a little bit about, but this kind of proves what I had thought. There's that, so that's what made me excited and kind of really, really happy to be a Bitcoin holder, investor, and trader.
And I like what you said at the start, and I think it's something that's not really talked about a lot, that you were money savvy already before investing, because a lot of people right now they're investing without they're massively in debt, or they don't have any savings, or they're putting whatever savings they have left into the crypto market thinking that it's a lottery ticket that would make them rich, or they saw the success of their friend and that's why they're actually doing it. But I like what you did, that you had a great foundation, and as you had the great foundation, researching more and giving it a chance allowed you to be where you are right now. That being said, prior to this recording, you mentioned that you entered in 2017. I wanna ask this. What was going through your mind when it was crashing somewhere around December, and then to see it drop around March 2018, that entire period? As someone who was relatively new into the space, were you buying the dip? Were you selling, or what was going on?
Well, the thing was, is I started to diversify into altcoins because I was kind of learning how to trade then. Like it kind of took a while, but like, well, not necessarily a while, because a lot of the technical analysis tools are heavily math backed. And I do have a pretty decent math background due to working in healthcare and then wanting to become a pharmacist. And because you have to take all those chemistry, biology, math classes, the calculus. I know some of you guys know about those derivatives, but so what happened was, like, obviously you put all this money in and then you see it going down. And I was like, oh my gosh. But thankfully I started to learn how to trade. So I was able to kind of not get totally wrecked, but I wasn't super savvy enough to where I was like, oh my gosh. But at the same time, the money that I had invested was disposable income. And disposable income basically means, like, if that $1,000 goes to $1 million, yay. Or if that $1,000 goes to $0, obviously that hurts. But at the same time, it is disposable income. It is money that I didn't need to pay mortgage, to pay rent, to buy food, to pay bills. So there was that important aspect. But of course it does hurt when you lose money. Like, we're in a downturn right now, and there's a couple positions I wasn't able to quickly make moon bags out of or do anything out of. And now I'm kind of like, oh, this stinks. But at the same time, that's part of the plan. Like, I understood the risks and I assumed the risks with those.
Your approach for it was, you were trading on the onset, or or do you have also a separate portfolio that's for hodling and investing, or just purely trading for everything that you have?
So I have, my portfolio is very diversified. I have a part of my portfolio that's like trading, a part for long-term holding, some for like really risky stuff, some for DeFi staking, some for NFTs, some for metaverse. So everything is very different. It's different structured. My biggest portion, I'm going to say, is stable coins. And the reason why is because with those stable coins, what I can do is I can put those on centralized exchanges. Yes, there is risk associated with that, not your keys, not your coins. And when we're talking about crypto, we're talking about self-custody. The reason why we like Bitcoin and cryptocurrencies is because we get to control our own wallets. We have a private seed phrase. Depending on what kind of cold storage device you use, sometimes you have a password in conjunction with the private seed phrase. So that means actually owning and being in control of your own finances, which is not like a bank. With a bank, you have your assets in custody with somebody else. So a bank could basically go in and say, we're going to take this. So that's the cool thing about Bitcoin, is you get to be in complete control of it. But with some of my assets, I do have them on centralized exchanges, and I am able to earn some passive income. There's other different types of passive income avenues you can do with DeFi staking, the pools, the farming. Those do carry a lot more risk because you get to somewhat control your keys for those, but there's exploits, there's all kinds of things that happen. So I prefer taking, not making the 100% APY and maybe getting like 8 to 10% APY. It feels just a little bit better for me. But my portfolio is very well diversified, and it's a much smaller amount that I'm actively like being very risky with. And then the stuff that I'm trading it's small as well, but it's a little bit bigger than some of the risky stuff.
I'm a big fan also of centralized exchanges. I do have wallets, and I do love DeFi, but I think there's so much security. There's so much things that before you get to take the money out from your wallet in an exchange, it's hard. There's more authentication, and it protects people from getting their money stolen as well. And I like what you said about stable coins, that I like it because it gives you the courage that whatever happens in the market, even if there's volatility, your stable coins will kind of keep you anchored in it. I'm curious about this. So you mentioned there's a portion about your portfolio that's about trading. So how do you go about that? For the benefit of people who want to learn how to trade, how do you filter it out? Given that there's over 13,000 tokens out there, what's your mechanism that you just to spot the ones that would work for you? Because at the end of the day, in crypto or even in stocks, what works for you won't work for everyone else, and vice versa. And what they're filtering out is different. But how do you do it?
So it kind of depends. So one of the cool things I do on my YouTube channel on Sunday nights, it's kind of like a degenerate fest. So it's kind of like a free for all. And what that means is that I let my audience come in and they get to request different altcoins. And so whatever altcoin that they're requesting, I will go ahead and I will chart for them. So let's say that they want like very risky meme coin. I'll chart with them and I'll be able to say, I would be very cautious with this because, it's low liquidity, very low market cap. It's kind of hard to chart, but if you're interested in it, like we can go ahead. And then also too, I can disclose like I'm invested in this. I have a moon bag or I have a partnership, like anything like that. We can do that. But basically what I do is I'll go ahead and I'll look for setups. And if I can look at a project, generally it's some of the when it's something that I want to actively trade, it'll generally be like Bitcoin or Ethereum or some of the larger cap stuff. And the reason why is because I can have more, I kind of feel like I have a little bit more control with that to a certain extent. So then we'll just go ahead and we'll look for setups and we'll make sure that it makes sense. Like, I have to make sure that my indicators line up, my EMAs line up, support resistance lines up. So it has to be something that I can see a possible move to whether I can long or I can short. So I look for those types of things. But another thing that I do is I'm very cautious what I enter in. Like, and if there's something that's not making sense to me, I'm not just going to ape in. I'm not just going to jump in. Like if I feel like, let's say all my indicators look great, I'll go ahead and I'll jump in. But if I'm not seeing confluence on timeframes or with the different indicators, maybe I just won't take an action, or maybe I'll just paper trade it and see if that, see if it ends up playing out. But one of the things I don't want to do, I'd rather take no action and miss out on a potential gain than do something that's kind of emotional or and just pop into it and then get wrecked and then, lose a little bit of my position or lose 10% of that particular trading stack or 5% or 20%, like whatever it is. So I'm very cautious what I get into. And these days, well, not now because the market is in a bit of a downturn. I'm more of a swing trader. I like the longer term positions. It makes sense for me.
Looking at how you would analyze. So how would you stretch out your charting? Do you start with a daily candle or you go with the smaller time frames first? That's my first question. Second, you mentioned about indicators. What's your take on the moving average? What's your rationale? Because there's so much time frames to choose from for it. And my next question is, from the moving average, everyone knows that it goes above, you buy, it goes below, you sell. Candlestick wise, this is where a lot of people find it hard to decide. When it goes above the moving average, do you buy at the moment it goes up? Do you go to a lower time frame, or do you wait for more candlesticks for more confirmation? And in the same way for selling, how do you do it?
So it kind of depends. So I have a custom tool that I use that's from a good friend of mine. It's called Market Cipher. It is a paid tool, so just full disclaimer, but it's something that I do like to use to kind of help show me confluence. And it does have like the RSI. It's got the MFI, which is a tool that I love because it tells you when money's coming and leaving into the market. You obviously want to pay attention to projects that they have money in the market. But when you see that downward tick on the MFI, that's like, okay, money's leaving the market. So maybe we're going to start to see loss of liquidity or some other things, so there's that. But when we're talking about EMAs, like I like to use exponential moving averages because they move a little bit faster than moving averages. And the really cool thing about it is in crypto, we want to use faster indicators because crypto does move a little bit faster than traditional stocks. My go-to exponential moving averages are the 9, the 21. I'm visualizing in my head right now. The 9, the 21, the 30, the 50, 100, and 200. And an ideal setup that I like to see them all propped upward like this and price action going that way. And a lot of times I'll go back, I'll look at previous fractals, and I'll see like anytime they've bounced on the EMAs and to help determine a good entry. So for example, when Bitcoin is super, super bullish and altcoins are super, super bullish, you'll see like this beautiful upward motion or this pattern, and you'll also see the zigzagging on the EMA. So I want to go back and I want to see when we do have those pullbacks that hit on the EMAs, how far it goes down. Because sometimes you'll see altcoins, different altcoins, like some will just bounce off the EMA 9 and keep going up, EMA 21 or EMA 30. So they'll generally look to kind of set bids there and then kind of scale down, set a stop, do whatever it is that I need to do. So it kind of depends. And then I like the daily, the 12-hour, the 6-hour, and the 45-minute. But if it's like a shorter term position, maybe like a week or something, I'll generally look at the 6-hour, the 12-hour, get some confluence with the daily if I can. If it's like a scalp, then maybe like the 45 and below, kind of depending what it is. But I do like to look at lower time frames to kind of determine what's going to happen. Sometimes it works out and sometimes it doesn't, especially with crypto, because if Bitcoin decides to dump, then everything else will decide to dump too. So you can have the best setup you want with an altcoin, but if Bitcoin gets volatile, then everything else will too.
I think that's what technical analysis is basically. It's risk management. It tells you when to be in, it tells you when to be out, and if you're wrong, it tells you. It's about also cutting losses and getting out of that particular position. So you said moving averages when they're all slanting up. There are instances when they're all slanting up that the shorter one, say the 9-day moving average versus the longer one, the distance is so far apart already that the candlestick from the longer moving average is far, meaning it has gone up already. Do you still enter those types of setups where it's bullish, it has momentum, but it's not anymore at the point where you could have gotten it at a much lower point where it just broke out from those earlier moving averages?
Kind of depends how I'm feeling. And then I also like to look at different time frames to kind of see like what's going on, because maybe the hour is correcting or the 4 hours correcting, but the daily and the 12 hours still bullish. So it really, really kind of depends. Another thing that I like to use in conjunction with exponential moving averages is I really like to draw trend lines, and I like to identify crucial areas of support and resistance. And I kind of like to watch those for a little bit before I enter. And now I'm more of a breakout trader, and like I'll take, obviously when you're looking for a breakout, sometimes you're not able to catch that move right when it goes. But at the same time, I feel like I'm doing a better job at practicing risk management. So I feel like that kind of works with my schedule a little bit better. So it really kind of like it kind of depends with the setup. Like sometimes something's pumped already and I just have a gut feeling that this thing's going to continue to go. So I'll go ahead and I'll enter in, and that might be a little bit risky. So we try not to chase green candles, but at the same time, I'll have an area where I'm comfortable cutting the position if it doesn't work out and taking profit.
When I started investing, it was primarily stocks, and I was in my early 20s. There's a breakout, I'd like to go all in on that particular. No, when I say all in, whatever I allotted for that particular position,
right,
I would put it in one go. But as I got older, maybe it's age, or maybe you learn stuff also in between. When I see a breakout, I tend to tranche it. What's your style into that breakout? Put your entire allocation for it already, you tranche it, and if you're tranching, what's your methodology behind it?
I like to always set limit orders. Like I'll generally stack bids down, like 10% of my stack, and I'll market buy. So I kind of quench that FOMO, but then I'll set bids like kind of how I was talking about setting them down alongside the EMA, where it generally will retrace to while we're still in an uptrend, and I'll set bids all the way down. So generally I do like 10, 10, 10, 10, 10, or maybe sometimes 20, 10, 20, 10, and I'll stack my bids down that way. And then, it's how I'll have the stop losses in crypto. Kind of depends, because the markets are so volatile. You have to be careful, because we do have whales. Like when you're trading a larger cap project, something like Bitcoin, you do have whales that are kind of looking for those stop losses, for those wicks, and they'll get those scam wicks down and whatnot. So it kind of depends. Yeah, it kind of depends. So sometimes you have to take more risk and set your stop loss like below that particular area, and it could get a little bit scary, but it could end up playing out too. But just as long as you understand the risk, and in your trading journals, you have the bearish plan, you have the bullish plan, and you have that this is the risk that I'm taking.
And those wicks suck kind of bit, because sometimes you set it there, it stays there for 2 seconds, and then it goes back up.
Yeah, but at the same time too, if you're not breakout trading, you're just trying to let's say you want to get in and swing trade a project that you're really, really interested in, or dollar cost average on it. Not dollar cost average, but you want to set limits on, like for Bitcoin, for example, I have bids all the way down to $20,000. So I've got a bunch of limit orders stacked all the way down, but sometimes those swing wick lows can fill your orders, and that's a great feeling. Like a lot of people just want to invest in all these different crypto projects, because it's the lottery. And yes, some of the stuff can go to the moon. It can do incredibly well, but at the same time, you have to be so careful. The market doesn't care about you. It doesn't care about you and your feelings at all. The name of the game is making money. And the way you make money is you have to remove your emotions, and you have to have a plan.